Now we will discuss some of the aspects concerning correspondent banking, role of Exim Bank. This we have already covered, RBI, FEMA and FIDI, okay? But let's talk about these two things. First of all, how is it relevant to international banking? See, we all know that there are domestic branches and there are overseas branches. There are certain banks which are operating abroad. For example, suppose I have to settle in euro currency. Say, as a bank in India, I might not have the resources, or in that particular currency I might not have sufficient balance. So what do? I have to look at some other bank who will help me in payment of euro or similar currencies. So it's very, very useful for me as a banker domestically to have some bank abroad who would help me with payments and settlements in euro. So I think the position is clear to you. It's a relationship, correspondent banking is a relationship between a domestic bank and an overseas bank. It could also be a overseas branch of a domestic bank. But 99.9% recurring, it is always the overseas bank that helps in payments and settlements in a particular currency. So effectively what happens is a domestic bank opens something like current account. Just as we people open accounts with our bank, put the money and draw it when we require. Similarly, if you take bank as such, bank would open a current account with an overseas bank and operate it like any normal current account customer. Instructions will be given for executing payments, and that correspondent bank will receive money or settlements on behalf of the domestic bank. I think it's clear now, right? But it doesn't stop there. Correspondent banking has got a lot of other roles. Let's see what they are. We already discussed it's a relationship between two banks, okay? And what else? Payments, collections, overdrafts and investment services. Let's look at all these one by one. In case a settlement is required to be made to a domestic bank in a particular foreign currency, let us say US dollar. Now naturally, as a domestic bank, I might not have a dollar account in India, whereas my customer needs to receive dollar on behalf of payments and settlements. Let us say some credit is to be received. In that case, collections can be received in the nostro account or the correspondent banker's account and passed on to the end customer. Next, in case settlements have to be made and suppose there is a gap or a delay or a mismatch in receipts and payments, it might happen that I might not have a balance with the overseas bank. In that case, overseas bank would settle on my bank's behalf by creating an overdraft. It's very similar to the domestic arrangement. We all know that current account sometimes when it is overdrawn leads to an overdraft position. So correspondent banking is also about giving overdraft facility. Now, since it is an overseas bank, that bank would know more about the investment climate, investment opportunities and investment possibilities, including the risk and reward. So in that case, what happens is a domestic bank can look to a correspondent bank for managing or consulting in respect of investment services. Now, if you will recall, we had already talked about LC advising. LCs we had already discussed. What were the parties to LC? We told you that LC applicant, that is a buyer, then LC issuing bank, then an advising bank which advises the LC on behalf of the issuing bank. Third is where the exporter outside, the seller of the goods is not comfortable with the domestic bank which is opening the LC, sometimes may insist on confirmation of the LC. A third bank steps into the picture and confirms it on behalf of the LC issuing bank. We have already discussed this earlier. I am just trying to recap what we have talked about. So in that case, what happens is the correspondent bank can do advising job, confirmation job also. What does it mean? That means the correspondent bank can confirm an LC. Let us say my bank is opening an LC in favor of a foreign seller. What happens? The Indian importer generates this LC and I, being the issuing bank, issues the LC. Now, two things have to happen. The LC has to be advised to the exporter. Secondly, where there is a discomfort, the LC has to be confirmed by another bank. So, a correspondent bank can handle both these jobs. Then, acceptances. A correspondent bank can accept to pay on behalf of domestic bank. Again, it's part of the correspondent banking relationship. Then third, guarantee can be issued under correspondent banking. That is to say, a correspondent bank can issue a guarantee on behalf of a domestic bank. Then, derivatives. And what is derivatives? We all know, we have already discussed it. Let us take, for example, a forward contract or a option contract. Now, my correspondent bank can help in what is called issuing or providing derivatives. We have already discussed this, isn't it? Currency derivatives we have seen, forward we have seen, options we have seen. So, a correspondent bank can provide the derivative service on behalf of the domestic bank. Next is custodial services. For example, when you have shares, underlying shares, in that case, the shares have to be kept in custody, right? Of course, now it is in electronic form, but even then, there is a custody involved, and where there is a cross-border service required, custodial services is also given by correspondent banking. Then, just as a seller has got discomfort about the buyer, it could be that an Indian customer who is exporting will have some discomfort about the foreign buyer. In that case, correspondent banker can provide references and credit reports. What is the purpose? Purpose is to add to the comfort of the seller, saying that this party is credible and credit worthy. Next, correspondent bank can also talk about fundraising opportunities and help the domestic bank in going about the raising of resources. Next, a correspondent bank can also help a domestic bank in providing training for the staff concerned who will be handling this business. Last, this is very, very useful. Seminars on contemporary topics can be conducted by correspondent bank on behalf of or for the benefit of domestic banks. Now, let us look at all these things. What is an nostro account? I already gave you the example. Let us take, for example, Citibank, New York. Now, when a domestic bank needs dollar funds or needs to collect, receive or pay in US dollars, the designated bank, namely Citibank, will act on the instructions of the domestic bank. And therefore, the current account of, let us say, a domestic bank, X bank, with Citibank US is called nostro account. Nostro accounts are always designated in foreign currency. Next, let us look at vostro. Vostro means, let us take a typical example where some of the Middle East banks have an arrangement with the domestic bank for payment of drafts. Because we all know there are a lot of Indians who have settled in Middle East, and remittances are required to be made by them to Indian beneficiaries. And it's always useful for the Indian beneficiary to have remittance in Indian rupees. So what would happen is, an overseas bank can open a rupee account with you and operate on that rupee account, which is now called vostro. So we have nostro, which is in foreign currency, vostro is in Indian rupees. Now loro is third party account. This is my account with a foreign bank. This is a foreign bank account with me. This is a third party account, that is third country account, I would say, which is neither a nostro nor a vostro. Then these are some of the important services and what is called aspects of correspondent banking. Today, when cross-border trading has assumed such importance, there is also a requirement of payments and settlements. And correspondent banking helps in the smooth functioning and smooth execution of settlements and payments, which is where this has become a very, very important part of international banking. Okay? Let's now talk about various payment gateways. We already spoke about payments and settlements, execution of payment instructions and receipt instructions. That means when funds move internationally, that is cross-border, necessarily there has to be payment gateways available. Now some of the most popular and huge transaction payment gateways are SWIFT. I think this we have already discussed. SWIFT stands for Society for Worldwide Interbank Financial Telecommunication. So SWIFT is a very, very fail-safe, secure and 100% error-free method of transfer of funds. It's supposed to be by the use of exchange key and banker identification code. These two are very, very critical parts of SWIFT, and there are messages which are pre-formatted. So to say, there are templates which have been evolved by SWIFT for putting through the transactions, and banks are supposed to execute their payments or instructions on the basis of standard formats. So whenever any transaction is to take place through SWIFT, obviously and necessarily it has to be in that what is called specified format. Now what is this? CHIPS. Nothing to eat. CHIPS is Clearing House Interbank Payments. Okay? This is a New York based facility, and STP stands for straight through processing, and what is required is unique ID number, and the STP takes place directly from the remitting bank to the receiving bank. There is no what is called intervention in the middle of this payment system. So that is a power and that is a smoothness of this facility. Next is Fedwire. Fedwire is again a US based funds transfer facility. There you need to have a ABA number. This is pertaining to American banks. You will find that this is New York based, whereas this is entire America. That's why you have this Fedwire. Fed means federal or the federal US. Next, CHAPS. Just as you have got CHIPS in US, you have got CHAPS in UK. What does CHAPS stand for? Clearinghouse Automated Payments. Very, very similar to CHIPS, but this is meant for banks in London, this is meant for banks in New York. Now, just we have US and UK based systems, you also have got a Euro or Europe based system. This is called Target. Effectively, it is an RTGS like system for payments and settlements in Europe. Okay? Now, let us come back home. You already know about this, right? RTGS is real-time gross settlement system, and NEFT is National Electronic Funds Transfer System. So this is applicable in India. RTGS is meant for transactions above 2 lakhs and NEFT is meant for transactions up to 2 lakhs. Please understand, NEFT does not have an upward ceiling of amount involved. Advantage in RTGS is that it's straight through again, whereas NEFT is batch processing. So that's the difference between these two systems, and ultimately all these form part of payment gateways. Okay? Now let's move to the next point. What is Exim Bank? Exim Bank means Export-Import Bank, right? Now this bank has been essentially created to help cross-border trade and cross-border facilities. Export-Import Bank, that is what it stands for, and some of the facilities that are provided by Exim Bank are, if you take the exporters, exports to be internationally competitive. So Exim Bank helps to enable exporters to have exports which are internationally competitive, and then more important, alternate financing solutions. Exporters could have normal finance, like we have already discussed, pre-shipment credit and post-shipment credit. This is the usual tranche or method of credit. Besides this, your Exim Bank provides alternate financing solutions. What are the solutions? Suppliers credit. We have already talked something about it. Let me repeat. What is suppliers credit? Usually what happens is supplier gives time, correct, to the buyer to make payment, and to the extent of the payment being deferred, supplier is out of funds. Now bank enters into the shoes of the buyer and makes funds available immediately. It's a win-win because supplier gets the money immediately, buyer need not make funds arrangement immediately, so credit period continues to be available to the buyer, whereas supplier is getting the funds immediately. So it's a very, very convenient method. Now what is buyer's credit? We have already discussed this. Still, let me ask you. Buyer's credit is where funding for the buyer takes place. Here it's a supplier who is funded. Buyer's credit is where buyer is funded. So alternate financing solutions include supplier's credit, then project finance. Project finance is what? Huge projects. So Exim can provide finance for huge projects and provide for import finance in respect of the projects. Please understand, when it's a question of project funding, the funds requirement is very huge. Second problem is that, or rather I won't say problem, second aspect is that the repayment time could be very long. Banks are essentially working capital financiers. Therefore, Exim comes in a big way in supporting project finance and also provides import finance related to projects. Next, there is a possibility or rather opportunity for investment overseas. Now Exim also provides overseas investment finance. Next, consultancy and advice for exports. This is particularly relevant for small scale, that is SME exporters, and for exporters who are entering into the subject or entering into the what shall I say business for the first time. So consultancy and advice helps the exporters to come to informed and correct business decisions. Next, let's talk about problem solving. This is not related to financing. This is problems which are related to exports. Exim Bank helps the exporters in their solutions to various problems. Okay. Now, this is another extension of more or less the same thing, but then this is a matter of deferred payment and turnkey project exports. You are aware that many of our Indian giants execute projects abroad on turnkey basis. Turnkey means everything is set and ultimately what the ultimate beneficiary has to do is go and commence operation, which is why the name is turnkey. And deferred payment is where it's going to be for a very long tenure, long tenor. So we are discussing these two, both of which are areas where huge funds outlay is involved and time involved is very, very long. Now, you have just seen what Exim Bank does for exporters. Now, what does it do for banks? Bills rediscounting. If you will recall, when we discussed post-shipment finance, we were talking about three types of funding. What are they? Main things are bill purchased, bill discounting and bills negotiated. I mean export bills purchased, export bills discounted and export bills negotiated. Now, eligible bills can be rediscounted with Exim Bank. What is the advantage? Suppose I have purchased, let us say, export bills. What is happening? I have provided funds to my customer, right? So as a bank, I am out of pocket. I will have to wait for the realization of the bill for my next funding operation. Now, refinance from Exim Bank provides me funds on the basis of eligible bills. Therefore, my fund cycling and investment or deployment remains intact. Then refinance for term loans, very similar. This is a case where bills are rediscounted and money is made available by Exim Bank to the banks. This is a case where term loans are refinanced and other export credit is refinanced by Exim Bank. So banks, they can augment their deployable funds under this arrangement. Then Exim Bank can also help and support or jointly issue guarantees of high value along with the banks. Okay. Then let's talk about financial institutions. The relending to international banks for import of eligible, I am sorry, there are two for here, but please ignore one of them. Relending to international banks for import of eligible Indian items. You are able to understand what it means? Relending to international banks, that's quite clear. For import of eligible Indian items, what does it mean? Obviously, an Indian exporter has to export the goods abroad and the importer abroad has to pay for it. Now, international banks can be funded by Exim Bank, just as this is an export refinance, this is an import refinance for the importing country. Okay. Then lines of credit to foreign governments. What does line of credit mean? Lines of credit means money is made available to the end user, and what happens is as and when the money is used, the line of credit gets exhausted. As and when it is paid back, line of credit gets reinstated. It is a very, very huge comfort for the beneficiary of the line of credit, and here what happens is Exim Bank provides the line and let us say foreign governments can use the line as and when they require. It is something like a cash credit or an overdraft, limit sanctioned, and the customer ultimately has a liberty or the right to use the funds. So a line of credit is on similar lines.